As always, now, joining us this week on the program, he is our guest, our good friend from Total Farm Marketing by Stewart-Peterson. Bryan Doherty is here. Bryan, how are you today?
Jesse, I'm doing great. Thank you. Again, Happy New Year. I know we're a week into it, but let's hope for the best in 2021.
Yeah, let's hope for the best in 2021. And Bryan, we got to, I think, start with the big elephant in the room and the thing we're watching here. We are under 24 hours away from those January WASDE reports, and today's trade we were a little lower. I saw a nice recovery in soybeans from the morning. Just a lot of position squaring, it seemed like, ahead of that report. What are your initial thoughts on Monday's trade?
Yeah, that's how I would term it too. We saw beans have a firm overnight trade and punch into new highs. Not a lot, but crawled into new highs, and then had a difficult morning session, but came back at the end uneventful. Position squaring is what I would term soybeans. Corn a little defensive. I think the news there, Jesse, was maybe just a little bit more on the defensive side, and that's why the market traded as it did. Argentina did indicate that they had likely allow exports again on their 2020 crop, the rolled crop, but a capped amount up to about 30,000 tons a day. So it's still a number. You had the dollar up for the third consecutive session. So between that and $5 again acting as resistance in corn, and what we think is a fair amount of farmers selling. We're hearing from producers who made some sales. They'll say I sold 10,000, 20,000. So they want confirmation that was the right thing to do, or they should do more, or just kind of scale into this.
Well, and let's focus on that corn market first. And we look at kind of the average trade guess for tomorrow. Stocks 11.951 billion bushels, carry out 1.599, yield 175.3 bushels per acre. That's kind of what we're looking at for the average trade guess. And like you mentioned, that resistance is $5 mark now. It's kind of that that barrier, that brick wall that we can't really break through. Your thoughts if we realize those average numbers, what do you think the market's going to do? Is the market going to take this and run with it and break through that resistance, or are we just going to kind of hold where we're at?
I don't think corn itself will break through the resistance. I think if beans decide they want to continue their upward trend, they pull corn with it. But if those numbers are realized, we're talking about a decline in carryout that's been talked about for months. So it's not new news. As with any report, Jesse, the market will key on a number of things that could be term surprises, and those are obviously either your supply and demand factors. Really don't see in this report where there's anything significant. Historically, when we've seen a downgrade to November production, or that is yield, we see most of the time the repeat in the January report. But how much can you take this crop down, I guess, is a question. So most analysts are just somewhere around 175 or a little bit under. That makes sense to me. I think the reports could be rather old news pretty quick, and then the market focuses on three areas: what the dollar is doing, what the weather looks like in the southern hemisphere. That'll be probably your biggest variable, and then do exports continue? Does the demand stay strong in the market, or does that begin to wane? Last week's export sales number on soybeans, a marketing year low.
Well, and I know as well that with the dollar, that's something we should talk about as well. That U.S. dollar index has been weaker, and now all of a sudden, like you mentioned, 3 up days in a row. So you have to wonder: are we starting to see a rebound in the dollar, or is this just part of the roller coaster?
Yeah, probably part of the roller coaster, but the dollar, like any other tradable thing, will move, and it's been, as you said, down, down, down. So when you start to see a reversal or some kind of an uptrend, typically you'll get your buy stop orders triggered, and those are people who are, let's say, short the market or want to go long. You can exit or enter with a buy stop, but it's an order above the market, so that when prices move higher, you're buying. Well, that doesn't make a lot of intuitive sense, but if you've been riding the trend down for a long time. The market's now telling you to buy back your contracts. You're buying what could be the very low end of the range. So you've got that. I still think your biggest event or events that are going to move the markets are the weather over the next 30 to 60 days in South America. It's just that important. The world doesn't have a lot of room to err on crop production.
Yeah, and they continue to be dry down there. They picked up some beneficial rains here and there, but it's very, very isolated in nature. So it'll be something to watch with South America. Let's look at soybeans. The average estimates for Tuesday's reports: 2.92 billion on stocks, carry out 139 million, yield 50.5 bushels per acre. Now, we've heard a lot of numbers floated out there about this carry out and how tight it could be. What are your thoughts? What are you and the team at Total Farm Marketing seeing heading into tomorrow?
Yeah, good question. So everything's relative. Again, like we mentioned in corn, it seems there's this widespread expectation, and maybe rightly so, that carryout will be down tomorrow. So last month was 175, and let's just use 130. So that's what, 45 million bushels less. That's a pretty good number on any report. But at the same time, if you look at percentage changes, and you take the 45 and divide that by the 175, you're going to get something close to 25%, 24, 25%. That is a big change. And when you get that tight, you're kind of what we call pipeline. There's just not any room for error. So unless we really see something dramatic on this report, really don't know where we're going to find a lot of negativity out of this. It's just how the market chooses to react to it. A few days up in the dollar, I don't think have that much bearing at this point.
Looking as well, and the one thing we've seen a lot of, Brian, is just a lot of money into this commodity market the last few weeks, whether we're talking corn, beans, wheat, just a lot of money flow. And, kind of looking in the crystal ball here, if we get this report as expected, you kind of mentioned it's probably going to be old news real quick. That would seem to indicate we'll probably continue to see a good money flow into this market. But if we get something unexpected that's negative, do you think that could stop the money flow into this market pretty quickly?
I think it could at least pause it. You're right. When you're this built up, I think anybody who's a money manager, they didn't get to be a money manager by not kind of planning and thinking ahead. So doesn't mean they're right, but I would think that there's some pretty strong exit strategies if the market provides those signals. Now, soybeans on this rally have a couple of times posted some really nasty looking bearish key reversals and have just shredded those and moved higher anyways. And the stocks usage number where it's at probably points closer to $15 from a historical perspective than it does under 14. So we like to think the beans are well supported. All this money flow too is in it. What is that? Is that indicative of inflationary concerns? Maybe. We're spending a lot of money on stimulus and COVID related, and at some point, that could catch up to the market in more of an inflationary problem.
Brian, let's look at wheat. And I know we have the winter wheat planting figures. Those come out tomorrow as well from USDA. It really seems like this export market's quieted down. Wheat maybe starting to follow corn once again. I know Argentine wheat, now the cheapest in the global market by the sound of it. And, just kind of looking at all the factors here in wheat, we've seen a good run up in strength along with quarter beans, but one has to wonder where the wheat market goes from here. And whether or not it will continue to just follow corn.
I think it does, because if corn gets too pricey, wheat becomes a substitute. There's ample world inventories. The other thing, we take a look at something like the world projected carryout. So tomorrow, the average estimate is 315.3 million metric tons. Last month was 316.5. So there is a little bit of a decline in there, but it's about 1/3%. Okay, so it's not this massive amount. It's about 1/3%. Where like corn, 289 last month, expected 284 this month. That's a little bit of a bigger number. Beans last month, 85.6, expect 83. So you can see the changes percentage-wise are much bigger on the world front. Wheat is a world commodity. It's produced throughout the world. So if we're not seeing any significant expectation for change or perceived change, wheat prices probably either one or two things: follow corn up, or if corn doesn't go up, wheat prices may lead the way down.
Brian, let's flip over to livestock. Let's talk hogs first. I know hog futures started trading in China here this week. Futures in China were down 12%, but that Chinese pork supply quickly building up. Our exports remain high in the U.S. Our slaughter numbers are a little under a year ago, but we still got a lot of hogs out there. And that $72 mark continues to be that brick wall it seems we can't break through on front month futures and hogs. Mixed day today on the trade. What are you seeing throughout this entire hog complex that we need to keep an eye on as we start this week?
I'm guessing the problem with the hog market, it just has a tough time being perceptively bullish. We like the exports so far. You look at the cash index around 78, but here you got February futures around 68. You got April futures in that 73 area. Got the summer months with a premium, 84, almost $85. So kind of a conundrum there where it just seems to me that if you look at those daily slaughters, they're still more than probably adequate in this COVID environment. I don't want to be negative, and I've been a little negative and they proved me wrong, but I just don't think they can keep proving me wrong here. I think that's a market that's double topped. You look at some of these charts, and probably has a tough time moving back into those highs. I hope I'm wrong, but I think in this case, if you have ample, what appears to be ample inventory, you grind lower in the marketplace. And I think that's where we're at. I'm just anticipating that we'll see a slowdown worldwide in U.S. exports in the year ahead.
And that's also, too, going back to the China equation, with China continuing to ramp up their hog herd, that in itself will eat into U.S. exports, we would assume, at least.
I don't know why we wouldn't assume otherwise. So, yeah, great observation. That's so I'm not trying to be a Debbie Downer there, but I think that's kind of the reality of the hog market. Hopefully, I'm not accurate in that we punch this thing into the mid 90s, but I just don't see the supply getting that tight. Some will argue, well, higher corn prices will take care of that and allow that to happen. Well, I'm still not sure we've seen that. So, but we'll see.
Well, speaking of higher corn prices, higher feed prices, cattle producers watching that pretty closely. You know, we're starting to see box beef values seem to maybe weaken just a little bit here. The trade last week, we were looking for $1 to $2 stronger with all the turmoil we had throughout the week politically. Just seemed like things kind of took a quiet tone to end the week. And you know, Packers, we're just looking at feedlot country, and really we're stuck in this sideways range. But are you seeing anything in cattle, any signs that we might be able to break out of this and move higher here as we get into the first quarter?
Well, we're seeing some signs, but we're not seeing them, quick enough to gather our confidence, and we're not really seeing enough what I'd call winter weather concerns to add an extra couple or $3 on the cattle. Beautiful inverted head and shoulders formations, nice things that point to higher. We're just not getting it done. We might, between either adverse weather or when you look back at previous reports and the placement numbers, might find that into the first quarter things get somewhat tighter. And I think the board's, accurate in reflecting that. That's why there's premiums when you go from February to April of near $5. So we may have that, but I just don't. Boy, you can look back historically and say when we've seen grain prices at a certain level, or beans, or crude oil, or what have you. Where's cattle? Cattle have a long way to go to meet that expectation. I think it's just a big COVID issue and a big problem trying to get enough, not only consumer to go out and eat, but just logistics to move it around and everything associated with it. It's probably hindering the market.
Definitely. Well, show list this week higher in all feeding regions so far, and definitely looking at those fat cattle and feeders and just seeing where we end up as we work through the week. It'll be interesting to see and working through this first quarter, like I mentioned. Brian, dairy side of the equation, our Monday update there. Anything you want to share about what's going on in dairy right now?
Well, dairy's like no other market immune to this, but the box food program here really lit a fire under the dairy market, the dairy industry, really got things on a roll. When we look at the kind of the big picture perspective, the question is, one, can it last? Probably not. And why not? Well, production, if you might remember on the last report, was up near 3% from a year ago. So you've got those issues to kind of contemplate and grapple with there. But as far as the charts themselves, if you want to look at a good market that's had a good run, it's dairy. But I take a day like today, we had a pretty good surge, end up with a pretty big reversal as well. And when we look at all of the back months or the average price for the year, again, I employ producers to really recognize what that value might bring to them, and to really give that some long-term consideration of how they want to look at it now, including the January contract. If I go out for the year and we look at that, you're going to look at an average price of 1787. So I'm just running my chart up here. That's something to really think about. Now, 1787 is the average. So if you do what we call a strip in there, if you were to, let's say, sell the average, that's what you're going to get. Just bear in mind that each month will then settle up against the cash index. But I don't want to be a Debbie Downer in that either. But between hogs and milk, I think the perception, at least that I have, is that we've got expectations and the reality of, I think, ample inventory.
Well, a lot of things to look at. Bryan, any other final thoughts as we head into tomorrow's trade and into those reports for Tuesday?
Well, we've just flipped over into the new year. So final thoughts are that if you're a row crop producer in the year ahead, don't, necessarily wait for better prices on new crop. Remember, the market's going to assume that you're going to have probably more acres of both corn and soybeans, and it's going to assume that you're going to be a good producer. And if you assume that in yourself when you're a producer. So, and you expect that, and you probably should expect that of your neighbor and the neighbor's neighbor and the next county over. So this corn in that 440 area, certainly a good starting point to make some type of defensive posturing, if not outright cash sales. Then look at like a buy put, sell a call, hedges to arrive contracts. And then new crop beans, you've got this market hovering above the 1155. Doesn't want to get to 12 though. So I would use an 1155 close under that trigger point to sell 5 or 10%.
Bryan, if producers want to reach out to you and the team at Total Farm Marketing for a little advice on some of those strategies and more, how can they do that?
Sure, that'd be great. We love the questions, and we're good at sort of laying the paperwork, if you will, or laying the groundwork, whatever terminology you want to use, to have you understand those positions, especially in options, because they're good tools. But just give us a call. We'll go through it. 800-334-9779. Again, that's 800-334-9779.
Bryan, appreciate the time as always, and we'll look forward to talking to you next week. Thanks so much.
Excellent. Thank you so much. Appreciate it.
Bryan Doherty with Total Farm Marketing by Stewart-Peterson joining us today here on Market Talk for Monday, January 11th. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.